Hi guys, in today's video I will be discussing the importance of divergence signals in forex trading and how you can spot them. So let's take for example today's trading session. In today's trading session, as you can see, the price for example on the euro yen was forming higher highs. However, at this level here it started to weaken. It didn't. And on the RSI indicator, you will also see that the RSI was forming also a high here. But when the price was forming higher highs, the RSI couldn't follow with that. So it formed like lower high when the prices were forming a higher high. This is called a negative divergence, which means that after a negative divergence, we can expect the trend to slow down and reverse. Now, as you know, finding these divergences in real time is not very easy, because if you want to give every chart enough time to find divergences, it will need too much time. I have developed a simpler way of doing it. For example, here, as you can see, this already spotted gave us a line that we are starting to have divergences. Now, why do we see all these lines? It's because we have different indicators, different oscillators that can produce divergences. So what are these oscillators? As you can see, here we have a list of all the oscillators. So if we want only to see the divergence on the RSI, then we can turn them all off. And then we will have just the RSI divergence. Now, if you want to find all the divergences that have formed on the on that price level, also it's possible. So here, as you can see, the RSI is giving us that here it formed the divergence as we calculated. Okay. Now, if we want to find all the divergences that have formed on all the other indicators, we can also have this, as we will be able to find them all. And if we want to have, like, for example, the names, what are the divergences that have formed at a certain level? Also, we will be able to know. So we will know, for example, that here we had the divergence on RSI, here it was on CCI, here on stochastic. So we will know every divergence by name. Now, let's say, for example, we want to have a divergence signal only if there are like 2 or 3 different indicators producing divergences at that level. So here we can put the minimum number of divergences, we can say to 3. Okay, so we will know that here what are the 3 that gave us the divergences, what are the indicators that gave us so here we can control how many divergences. So to make things more clean, it's fine not to draw this, not to show the names, and then we can just let this draw for us the divergences. Now, let's say, for example, we want to see on several charts. Okay, let's see, for example, like in this case. Let's say, for example, here we had some reason to believe that the market was not ready to continue going up, like it was at some kind of a resistance or something, and we are only interested in seeing negative divergences. So we can just hide the positive divergences and we will be able to see the sell signals. Okay, this way it will help us to focus only on the signals that we are looking for. So this is a very by the way, this is a divergence signal that will give you the divergence directly on the next candle. So it's not like after 3 or 4 candles. So directly after we get the yellow candle here, the reversal candle, actually during the reversal candle we will start to see the divergence. However, it's better to wait until the candle has closed, so we will be able to confirm that this is the divergence, and then we can be trading this setup. So this is how you can easily find divergences, and if you want to download this indicator, you can find the link in the description below. Bye.